We have prepared for you 100 vocabulary terms that will help you study and prepare for your insurance licensing exam. Let's get started.
Adjuster. A person who investigates and settles insurance claims on behalf of an insurance company. Claim. A request for payment under the terms of an insurance policy. Policyholder. The individual or entity that owns an insurance policy. Premium. The amount paid for an insurance policy. Deductible. The amount the policyholder must pay out of pocket before the insurance company pays a claim. Coverage. The protection provided by an insurance policy. Liability. Legal responsibility for causing damage or injury. Subrogation. The process by which an insurance company seeks reimbursement from the party responsible for a loss. Indemnity. The principle of restoring the policyholder to their financial position before a loss occurred. Exclusion. A provision in an insurance policy that excludes certain risks or losses from coverage. Endorsement. An amendment to an insurance policy that changes its terms or coverage. Underwriting. The process of evaluating and selecting risks for insurance coverage. Loss. The financial detriment suffered by a policyholder due to a covered event. Peril. A specific risk or cause of loss covered by an insurance policy. Actual cash value, ACV. The value of property at the time of loss, taking into account depreciation. Replacement cost. The cost to replace damaged property with new property of similar kind and quality. Depreciation. The decrease in value of property over time due to wear and tear or obsolescence. Insured. The person or entity covered by an insurance policy. Insurer. The company that provides insurance coverage. Risk. The possibility of loss or injury. Negligence. Failure to exercise reasonable care, resulting in damage or injury to another. Third party. An individual or entity not directly involved in an insurance contract but affected by its outcome. Settlement. The resolution of a claim, usually involving payment by the insurer. Appraisal. An assessment of the value or damage of property. Arbitration. A method of resolving disputes outside of court, often used in insurance claims. Binder. A temporary insurance contract that provides coverage until a formal policy is issued. Cancellation. The termination of an insurance policy before its expiration date. Claimant. The person or entity making a claim under an insurance policy. Concealment. The failure to disclose important information on an insurance application. Conditions. The provisions in an insurance policy that specify the obligations of the insured and insurer. Contributory negligence. A legal defense that reduces the amount of damages a plaintiff can recover based on their own negligence. Damages. The financial compensation sought or awarded for a loss or injury. Declaration page. The section of an insurance policy that provides key information such as the insured, coverage, and premiums. Excess insurance. Coverage that provides additional limits above the primary policy. Exclusionary endorsement. An endorsement that removes certain risks or perils from coverage. Expedited claim handling. The process of quickly resolving claims, often used in emergency situations. Fraud. Intentional deception or misrepresentation made to obtain an unjust advantage or benefit. Grace period. A period after the premium due date during which coverage remains in effect, even though the premium has not been paid. Gross negligence. Reckless disregard for the safety or rights of others. Inception date. The date on which an insurance policy becomes effective. Insurable interest. A financial interest in the insured property or person, sufficient to justify insurance coverage. Insurance adjuster. Another term for adjuster, a person who investigates and settles insurance claims. Joint and several liability. a legal principle that allows a claimant to recover the full amount of damages from any one of multiple defendants. Lapse, the termination of an insurance policy due to non-payment of premiums. Loss adjustment expenses, the costs incurred by an insurer in the process of investigating, settling, and defending claims. Loss payee, a person or entity other than the insured named in an insurance policy to receive payment in the event of a loss. Material misrepresentation, a false statement or omission of a fact that is significant enough to affect the terms or issuance of an insurance policy. Mediation, a form of alternative dispute resolution where a neutral third party helps the disputing parties reach a settlement. Non-renewal, the decision by an insurer not to renew an insurance policy at the end of its term. Notice of loss, a formal notification to an insurance company of a loss or claim under a policy. Occurrence, an event or a series of events that result in a covered loss under an insurance policy. Partial loss, a loss that does not completely destroy or render the insured property worthless. Peril-specific policy, an insurance policy that covers only specific perils named in the policy. Personal injury, legal term for injury to a person's body, mind, or emotions as opposed to damage to property. Policy limit, the maximum amount an insurance company will pay under a policy for a covered loss. Policy term, the period during which an insurance policy provides coverage. Pre-existing condition, a health condition that existed before the start of an insurance policy. Pro rata, a method of calculating insurance premiums or refunds based on the proportion of time coverage was in effect. Proof of loss, a formal statement provided to the insurer detailing the extent and cause of a loss. Property damage, physical damage to or loss of tangible property. Reinstatement, the restoration of an insurance policy after it has lapsed or been canceled. Renewal, the continuation of an insurance policy for another term. Reservation of Rights, a notice from an insurer to an insured that coverage for a claim may be disputed. Risk management, the process of identifying, assessing, and controlling risks to minimize the impact of losses. Salvage, the value of damaged property that can be recovered or sold after a loss. Schedule, a list of individual items or categories of property covered under an insurance policy. Self-insured retention, the portion of a loss that a policyholder agrees to pay before insurance coverage kicks in. Statute of Limitations, the legal time limit within which a claim must be filed or a lawsuit brought. Sublimit, a limitation in an insurance policy that caps coverage for a specific type of loss or property. Total loss, a loss of sufficient magnitude to render the insured property worthless or beyond repair. Umbrella policy, an insurance policy that provides additional coverage beyond the limits of underlying policies. Underinsured, having insufficient insurance coverage to fully cover potential losses. Unearned premium, the portion of a premium that has been paid but not yet earned by the insurer, typically because the policy has been canceled before its expiration date. Uninsured, lacking insurance coverage. Valued policy, an insurance policy that pays a specified amount in the event of a total loss regardless of the actual value of the lost property. Waiver, the voluntary relinquishment of a known right or privilege. Warranty, a statement in an insurance policy that certain conditions will be met or actions taken by the insured. Workers' compensation, insurance that provides medical care and financial benefits to employees who are injured or become ill as a direct result of their job. Written premium, the total amount of premiums written by an insurer before deductions for reinsurance or cancellations. Actual loss sustained, the actual financial loss experienced by the insured as a result of a covered event. Adjustment, the process of determining the amount of a loss and the extent of an insurer's liability. Admitted insurer. An insurance company that is licensed and authorized to do business in a particular state. Aggregate limit. The maximum amount an insurer will pay for all covered losses during a policy period. All-risk policy. An insurance policy that covers all perils except those specifically excluded. Apparent authority. The appearance or assumption of authority based on the actions or words of the principal, in this case, the insurance company. Assessment. A charge or levy imposed by an insurer or a regulatory body to cover certain costs or liabilities. Assigned risk. A risk that is assigned to an insurer by a state pool or plan, often because it is considered too risky for the regular insurance market. Assumption of risk. A legal defense that argues the claimant knew and accepted the risks involved in a particular activity. Binder receipt. A document acknowledging the receipt of a premium payment for a temporary insurance binder. Casualty insurance. Insurance that covers loss or liability arising from accidents or unforeseen events, excluding life, health, and property insurance. Catastrophe loss. A large-scale loss event, such as a natural disaster that affects a significant number of policyholders. Coinsurance. A provision in an insurance policy that requires the policyholder to bear a portion of the loss, typically expressed as a percentage. Contingent liability. A potential liability that may occur depending on the outcome of a future event. Direct loss. A loss that is a direct result of a covered peril without any intervening cause. Excess and surplus lines. Insurance coverage provided by non-admitted insurers for risks that are not insurable in the standard market. Experience rating. A method of determining insurance premiums based on the insured's past loss experience. Fidelity bond. A type of insurance that protects against losses caused by the dishonest acts of employees. First-party coverage. Insurance coverage that provides benefits to the policyholder directly, as opposed to liability coverage which provides benefits to third parties. Forensic adjuster. An adjuster who specializes in investigating and analyzing complex claims, often involving legal or technical issues. Good faith. The principle that both parties to an insurance contract will act honestly and fairly, without attempting to deceive or defraud each other.
That's a wrap. If you found this video helpful, please give it a thumbs up, as it really helps the channel. Don't forget to subscribe for more content like this. Good luck on your exam.